Snipers, you have to see what's happening in the Bitcoin price right now as we've decided to another collaboration with Joshua Earp, my best friend, one of the best analysts that I know. His YouTube channel link is in the description below, but this is an important video. Joshua actually stressed the fact that I should put this video out because of the fact that Bitcoin closed a full weekly candle below the 200-week moving average for the first time ever in history. This is something that we talked about in our live stream 2 days ago. It was the fact that if Bitcoin against the SPY were to close below the 200-week moving average, that it was one of the most bearish things that I've personally ever seen happen to Bitcoin over the last 5 years that I've covered Bitcoin every single day, posting videos on it. I've never seen Bitcoin against the S&P 500 close a weekly candle body below the 200-week moving average, and it's not just me. If you go into the history of this chart, it's never done this in March of 2020, in 2018. So there's a lot to discuss today. I'm glad that Josh is also on the live stream with us because he's going to add a ton of value. And by the way, he did hit 100 subscribers from our first live stream 2 days ago. So let's get him to 1,000 subscribers now, and then he'll start doing his own live streams. But Josh, what do you think about Bitcoin with this weekly close first and foremost? And then I'm going to get into some four-dimensional revolving parts. But could you just talk a little bit about your perspective on this recent weekly close?
Yeah, for sure. I mean, especially so not only did we close below it on Bitcoin versus SPY, we also, closed below it on Bitcoin versus Tether USD, right? Is that what you're saying?
Yeah.
So typically, so for the first time ever, what about in March 2020? Did we slightly dip below that or did we have a weekly candle close below that? I'm just curious.
So in March of 2020, we did come below it, but the weekly candle body maintained price action above it. So it's kind of a hard one to say because if you look at it, it almost looks like it did kind of come down below it, but for the most part, the bodies of the candle, which means the open and the close, it was above it. This is the first time though a full weekly candle body and wick has closed below the 200-week moving average. That's never happened. That's a full-on release of the 200-week moving average, almost as if it's skydiving off of the 200-week moving average because it's completely away from it. From being in the markets for so long, one of the rules that I always apply when looking at moving averages, especially in these larger time frames, is even a wick to that moving average still means that we've at least held on to it, right? It's literally holding on to it. But when you're completely detached away, it's almost like you just jumped out of a plane and you're completely disconnected from it. And so that it's a very bearish sign. I mean, in the past when you've seen that happen to assets, they've seen a lot more further downside. I mean, it almost makes you have to go into the monthly chart and look at the 100-month moving average. And, that's currently sitting at 11,700. So,
wow. And, and there's a lot of confluence around that area too. So,
it would actually test the resistance of the rally that we got inside of the bear market of 2018. And what's interesting about that is if we do come there, where the 100-month moving average is currently sitting, if we were to just factor in the bodies of the monthly candles, if we were to come there, it would be testing another major support level the same way that 20,000 is a major support level because it was the 2018 all-time high. Where the 100-month moving average is sitting is also a very important level. I'm glad that you asked me that question, Josh, like what typically happens after a complete detachment of the 200-week moving average. Well, it's pretty simple. You just go into a larger time frame, right? You always say this, when in doubt, zoom out, right? And so when even the weekly time frame moving averages are not holding, you have to go to the next one, which is the monthly chart, right?
Yeah, I mean, it's going to be interesting. I mean, what I'm really interested to see is if we get a monthly candle close below the 200-week moving average. That would be insane, or whatever that moving average is up there. I guess that's, what is that, the 50-month? Because we're on the month chart, right?
Exactly.
You have 50, 100, and 200. So yeah, so if we get a monthly close below the 50-month moving average, which is that red line moving average that Naeem has on the screen right now, I mean, that would be unfortunately, that would be incredibly bearish. Now, if you don't mind, if you go back to what you have up before that, the weekly, because we were talking about the 200-week moving average. So yeah, I mean, that right there, the fact that we came up and tested it as resistance on that second green weekly candle right there next to our weekly candle we're forming now, and then now we have a bearish spinning top, candle formation right below that 200-week. I mean, that is, and the fact that even on March 2020, which was the ultimate, black swan event, but honestly, there's, as some other, analysts have said, I mean, we've got many, many, many black swan events. So whereas March 2020 was one black swan event, right now we have multiple black swans in the air. And so, and that's the thing, is because Naeem and I are both Bitcoin bulls, especially macro long term. And so it's very discouraging to see this. And Naeem and I were talking about it before we even hopped on here today. Man, we really hope this is a bear trap, right? I mean, and what better way than to form a bear trap than to close for a short period of time under the 200-week moving average, only to get, to go up much higher. But I mean, yeah, here in a little bit, whenever I share my screen, I'll share a few thoughts there. But I think that just by looking at it right now, I mean, it's definitely looking bearish. But we're going to be going over kind of our trading plan, right? Because obviously your HODL DCA portfolio is separate than your day trading portfolio. And that's something Naeem has taught me, in the very beginning. And it's so important, because if not, then you're going to be, breaking into your HODL portfolio to go try to trade more. And it's like, you got to have discipline as a trader, and we're going to talk about that when I share my screen, about the discipline and patience and also mindset and being okay with not being in a trade sometimes. I mean, there's an old saying in trading, it's trade the best, leave the rest. And so, like Michelangelo said, I see the angel in the marble and I carve everything else away. So you just have to, like, sometimes when you're in the middle of no man's land, which I'm going to, be describing that as well once I share my screen. But when you're in the middle of no man's land, it's better off to do nothing, and so what if it pumps without you being in a long, like, that's fine. I'd rather capital preservation, like Warren Buffett says, number one rule of making money, right, is never lose money. Number two is see rule number one. So that's very interesting. Now, Naeem, why don't you go into it and talk about what you got pulled up here? Because I think this is some interesting confluence between the old weekly open and that moving average you have right there.
So something on the Snipers channel that is a tradition is to keep the previous weekly open on the charts in green. And the reason I do that is for the immediate short-term traders, the ones that are margin trading, the previous weekly open is typically a place where you'll see institutions and you'll see whales, you'll see algos. They'll trade on that specific level even though there's a new weekly open, because a lot of the traders that aren't using algos are not paying attention to it anymore. And so what we have right now is a very, very garden variety retest of the previous weekly open, where, interestingly enough, Josh and I talked about this today. Notice how we had a significant amount of sell pressure come in prior to hitting the previous weekly open at 20,574. And why am I mentioning the exact number? It's because the algos trade the exact number. The exact number to the dollar, to the penny, does matter. And this is a clear example of why. Notice how the sell pressure came in, brought us right down above that previous weekly open, but we didn't touch the previous weekly open. We didn't touch the number until we started to see a consolidation. And then what do you know? We saw a push down into the previous weekly open, where guess what happened? The algos triggered their limit orders, their buy volume, which brought price back up, and we found support so far at the previous weekly open. We have to ask ourselves a question, though, based on the way that price action has progressed here at the previous weekly open, what is the psychology behind this? Well, if I were to think like an institution, what I'm looking at here is we had a strong amount of sell pressure that didn't want to go past the previous weekly open for a specific reason. And then when we did get below it, we stayed back above it. We found support and we found volume, but it was less volume than the amount of sell pressure that brought us here. And so what does that tell me? Well, it tells me that we've already cleared the order books here, the limit orders, the buyers that were down here are already cleared up, and that if we come back down towards this level, we're going to slice right through. There's no more volume, right? This tells me that we've already cleared the volume here at the previous weekly open. So I think 2018 previous all-time high, but something that you and I have been talking about, Josh, is potentially taking a long position here if we see price action get to 20,000, because when it comes to risk to reward, if we were to set stop loss down below the 2018 previous all-time high, it would make sense to have, let's say a 1% stop loss there where we could potentially take advantage of this move. As you mentioned, this is about 10% upside move here if we were to come to 20,000 and bounce, as we already have. I think you counted it 6 times already on the 4-hour chart. Notice how at the previous all-time high, we could count here 1, 2, 3, 4, 5, 6 that we've tested this level, we've held it. And so I think that that's something that's certainly on the table for the 4-dimensional revolving parts. What I'd take off the table right now is 24,000, just because the S&P 500 went up and breached its June 15th candle high. I know we've been talking about this. Bitcoin decided to do something similar in schematics, but not necessarily as strong as S&P 500 by forming this high here, which I think was a little bit of a violent move here, because if you were to go long here at the breakout of this high, then that would have been a very clear bull trap that happened. And if you were short, your stop loss was probably here. And so this not only probably trapped bulls, but it also stopped out short. So I think this was an ugly move that we recently saw for Bitcoin to come back down. And we were expecting this high to break, that we'd at least get to 24,000, but that didn't happen. So I think that's a sign of weakness there. The fact that we came here and we trapped bulls, and then price came right back down to test the previous weekly open now. So I don't like the fact that that happened. I think that that's a little bit of a toxic move that just happened. Is that bearish? Is that bullish? Who knows? I think that it's clear that we still have low volume. So that's what's happening right now. I think it's important to note that we are squeezed in between the weekly open and previous weekly open right now. If we do breach below this previous weekly open, the only next level of support is going to be that 2018 previous all-time high at 20,000, right? So, maybe on the first test, we take a long position on margin, take advantage of the 2, 3, 4%. And if, let's say, we reject this level, maybe this is where you take profits, right? At the previous weekly open, if we reject this level, or we come to the weekly and reject it, then I would be very concerned that price could actually even come further down to maybe even fill the CME gap at 18,440, right? So that's what I'm looking at. What do you think, Josh?
I mean, you make a very valid point, especially with that stop loss if you were shorting the double top. I mean, I saw the double top as clear as day. And the thing is, it's a good reminder to traders, right, that you always want to set your stop loss, even if you're operating with a very tight stop loss, you always want to set it slightly above where that pattern is playing out, or that market structure. So I'm really glad you brought that up, because it's a humbling reminder that you just got to give your stop loss a little bit more room than you think normally. Because usually with those wicks, which is what that was, those wicks are usually what stop you out and then kind of ruin it, right? And then kind of get you going. So yeah, that totally makes sense, And whenever I go into my stuff, I'll go over a little bit. But essentially, Naeem and I have the same analysis, But there's just a few different things that we kind of take turns talking about and all that. But essentially, we're of the same mindset, and it's and when you put our analysis together, it really is it's like having your own algorithm, pretty much.
Absolutely. And right now, I think an important puzzle piece that we'll monitor is going to be this Ethereum to Bitcoin chart, because we did have a very bearish daily close. And so one thing that was giving us a little bit of hope was the fact that, we got back above 53,500 Satoshis. And that was important because if the Ethereum to Bitcoin chart continues to sell off, then you can say goodbye to altcoins, right? Because altcoins are going to follow that sentiment. And so it was nice that we were able to get back above 53,500 Satoshis, but this daily candle I mean, look how bearish that daily candle is. It definitely looks like we're going to come back down to test 53,500 Satoshis, which also validates to me that we're not out of the woods yet, that we still have to practice caution because this is not a reversal most likely. And this is still going to potentially consolidate here, and it even could potentially continue further down the Ethereum to Bitcoin chart, which wouldn't be a very positive sign for the overall market. And that wouldn't be surprising based on the larger time frames. I mean, just look at these weekly candles. It's just been, 1, 2, 3, 4, 5 weeks of red. And so the Ethereum to Bitcoin chart is something we're going to be monitoring. But do you want to share your screen, Josh, and talk about what's happening on your chart?
Yeah, for sure.
Go
Let
ahead.
me know where you are.
I'm ready. Yeah, it's up.
All right, cool. So essentially, I guess I could leave this open too. Actually, I like it better without it. All right, so let's take a look at this, guys. What you're going to see here once again, is, I've got this yellow or this blue line. It's kind of overlapping. I put the white line for the pattern, which is this descending triangle, which has pretty much already been invalidated. So it's no longer really valid because we had the breakdown here. But if you consider that kind of like a...
By the way, that break, I'll tell you what that break was. That was the Canadian Purpose Bitcoin Spot ETF on June 17th, dispersing of 24,000 Bitcoin. They threw into the market.
Yeah, I was going to say, I'm not really counting it, yeah.
Yeah, it was, I mean, people were calling the Purpose Bitcoin Spot ETF dumb for doing that. Like, even if they wanted to sell Bitcoin, why would they just sell 24,000 Bitcoin into the market at the previous all-time high? I mean, it was very sketchy that they did that. I mean,
oh yeah, I agree 100%. Yeah, so I'm in the same camp as you, which is kind of just ignoring that. And it's so funny because I joke, Naeem was the one that told me originally, don't draw imaginary lines, and so I kind of, tell it back to him every once in a while. But essentially, just to go over this, so this blue line is a very key support level. It has the most weekly touches, 20,000. It's like a little bit over 20,000. It's like 20,026. And so we're looking at the 4-hour chart right now. Right here is really the only known resistance at this level. As far as horizontal channels, one of the biggest, breakthroughs I had in trading is just paying more attention, if not only attention, to the horizontal levels, because that at the end of the day is the only thing that really matters. I mean, we can all draw trend lines and all this and that, but and that's something Naeem taught me as well, is really focus on the horizontals, But anyway, so what I wanted to say is, so we have this descending triangle pattern kind of playing out here. It's a little bit of an imaginary line, not really, because before all this price action was here, all we had to go by was the slanting line right here. And then we also had this support down here, but I still keep it up. And I'm glad I still keep it up. I just subconsciously don't pay as much attention to it, but I do like to keep it up. So we obviously have support here at 20,000. We have resistance, which is the only known resistance right now, giving myself plenty of room. And then this white line is kind of the middle line. And then this green line, the dotted line, is kind of just like my alert, because I want to get an alert before it hits 20,000, so that way I can monitor the situation, which is also something Naeem's taught me, which is, don't just necessarily set a whole bunch of limit orders, set alerts instead, because you never know that the price could just keep on tanking, right? It's like what you said earlier, you buy the dip and it just keeps on dipping, it's like a fun situation to be in. So I'm very conscious of that. And I'm very thankful for Naeem for, helping get me started and doing all this. So the whole thing is this, guys. So that's what we're looking at here. And if you look at this descending triangle, we did get what? This is a 4-hour time frame. So that's where you want to be using your market structure, is on the 4-hour. So we got 1 touch, 2 touch, arguably that'd be a 3rd or 4th, but it didn't really, so I'm not going to count it. But 1, 2, 3, 4. We got 4 touches. Now, most, I would say amateur traders that might have a descending triangle built out, they might be saying, oh, okay, well, we got to bounce off the top of the descending triangle, which in most cases, by the way, guys, is bullish. In most cases, it is bullish. But the reason why I'm not being suckered into this, what I believe is could possibly be a dead cat bounce, and the reason I'm not going completely long yet, I'm not in a position right now, because it's just, we're in the middle of no man's land. And what I mean by no man's land is when you take this blue lines, the blue horizontals, our next real resistance, which is crazy. It sounds crazy, but it's at 28, almost 29,000. And you might be asking, okay, well, how did I get to that? Which we'll cover, if you guys are interested, we'll cover that towards the end. But because it's really, just to sum it up, it's just the amount of weekly touches, in previous market structure. So we'll cover that. So we're in between the blue lines. Anytime we're in between the blue lines, you will never see me make a trade. I just want to say that one more time because it's so powerful and it's so important. And I've lost a lot of money by ignoring that. And I've also made a lot of money by sticking to it. And the thing is, if we're in between the blue lines, you will never see me in a trade unless we have some clear volume and unless there's some pattern playing out, or there might be some fundamental news, or maybe sometimes I'll just FOMO in a little bit, on low leverage, small percentage of my account with a very tight stop loss. You can do things like that. But the older I get, the more mature, the more disciplined I become. I map out these horizontal lines. Like if we just, go here, I'll just show you, like you might be wondering, like 28,000, what the hell is he talking about, So if you just pay attention to these blue lines, I essentially zoomed all the way out. Remember, once, when in doubt, zoom out. And once I've done that, what I've been able to do is draw the lines that have the most confluence. So someone's at my door.
Yeah, no, it's fine. Go ahead.
I'll go answer the door. I'll turn it over to you, and then I'll just finish this as soon as we get back. But I do have some very important things to say that everyone needs to be aware of. So I'll go ahead and stop. I'll give it over to you, and then I will literally be right back. But I have a question for you, Naeem. What do you think about what's possibly going to happen next and play out? Because I'm very curious, because, I call it the Naeem indicator, the Naeem algorithm. I always want to run everything I do by Naeem first before I do a trade. So what...
Thank you, Josh. So, right now, I would say this for 100% sure that I believe right now we are still playing with fire. I mentioned that in our video yesterday, that until we can see Bitcoin get to 24,000 US dollars, we cannot assume that the worst of this is behind us. And I say that because it is clear right now that Bitcoin has had every opportunity and every reason to already move up from this recent low. It's already had justification to get to 24,000 US dollars based on the 4-dimensional revolving parts that we monitor on the Snipers channel every single day. But because it hasn't done that, it's extremely concerning to me. And I think that there's something that's fundamentally wrong right now with Bitcoin versus technically wrong that is causing this. One of those things could be the fact that if you have money in Celsius, one of the largest interest-bearing US-based, US-regulated accounts, you cannot withdraw your money still. And we still haven't heard from Celsius. We still don't know what's going on with Celsius. I think that the fundamentals right now, because here's something that I learned from my mentors in trading when I first learned how to trade equity markets and the Forex markets before Bitcoin trading was even around, before BitMEX was even around. I learned this, that trading is 10% fundamentals, 10% technical, and 80% emotion. So yeah, we cover the technicals because technicals are black and white. They're like the weather, right? There's a 50% chance of rain today. There's an 80% chance of rain. There's a 10% chance of rain today. I mean, that's what technicals are. Fundamentals are a rainbow, right? It's a narrative that's always going to come out of nowhere. It's going to be attached to the price action, but it could be anything. It literally can just be anything. And so the fundamentals are just as important as the technicals. And so I believe Bitcoin made a very bold statement by showing weakness against the S&P 500, and that's very clearly shown on the charts with the Bitcoin against SPY closing below the 200-week moving average for the first time ever. After the capitulation, we held above the 200-week moving average. It was the only chart that showed strength for Bitcoin. It was the only chart giving us hope, but it made a bold statement yesterday by closing the next weekly candle below the 200-week moving average. And so I think something fundamental is off right now with Bitcoin. It's not technical, because if it was technical, then it would have done what Bitcoin always does, which is it follows the equity markets, right? We had a June 15th candle high here, and then the equity markets, right? We had a June 15th candle high. Why is the S&P 500 up here, but Bitcoin is still down here? Something is up. Something is wrong here. Something's not adding up. That tells me that we're still playing with fire. That tells me that because Bitcoin did not follow the S&P 500, it should be up here right now. It should be up here, but it's not. And because of that, until we can follow the S&P 500, at least, it's not even that anymore. This is out of the window. This is behind us. I want to stop talking about this June 15th candle high because it just doesn't matter anymore. The fact is something is wrong. And I said this in the Discord today. Because of what happened to the Bitcoin against SPY chart, because of the sketchiness that we're seeing on the technicals, I'm either expecting a massive bear trap or a massive dump in the immediate short term, because this is off. Something is off here. And I'd love to hear your thoughts in the comments in the live chat. But to me, this says something is off. We've been covering Bitcoin every day for the last 5 years. It follows the S&P 500 in the immediate short term. I know there are times where we're in transitionary phases, and you'll see, let's say, more downside in Bitcoin than the S&P 500, or whatever it might be, or the S&P might form a lower low and Bitcoin forms a higher low, right? There's always those small, minute differences, but for the most part, it would follow the S&P 500, especially when it's weak against the S&P 500, especially when it's oversold against the S&P 500, especially when it's testing this major support that has never broke for this Bitcoin against SPY chart. It's always shown strength against the S&P 500. Let's just put it that way. And so here's my thesis. Oh, by the way, this adds to the fire. This adds to the thesis. Not only did Bitcoin not follow, but Ethereum actually did follow. Look at this. June 15th candle high. Ethereum did it. Why did Ethereum do it? Ethereum moved up. Why didn't Bitcoin do it? Maybe because institutions don't want Celsius to survive. Something's up. Why are they suppressing Bitcoin? Right now, they are clearly suppressing Bitcoin. I mean, my God, let's pull up Compound USDT, an altcoin, right? Look at this, June 15th candle high. Why is Compound all the way up here? But Bitcoin didn't. They're suppressing Bitcoin. Something is up. Something fundamental is up right now.
Well, here's the thing, Naeem. Maybe it was all planned this way. I mean, Satoshi Nakamoto translates in Japanese to of central origin. Not just that, but, SHA 256, the encryption rate behind Bitcoin is created by the NSA. So maybe this was designed to sucker everybody in, perhaps, and strip the liquidity out of the market. Now, I'm not saying that's 100% true, but I'm just saying I live in the quantum world. For all I know, it could be the complete opposite, right? But all I'm saying is that I don't leave anything out of the realm of possibility. And it doesn't make sense for a Compound to be pumping more than Bitcoin. So there could be some type of suppression going on, and then I'll finish what I was saying whenever you're done, but please continue because this is all very interesting.
Josh, what you're saying is huge, man. And I say that in the fact that you and I have been around some of the biggest whales in this market. As a matter of fact, it was you that I flew on a private jet to Wyoming to meet with the founder of Ethereum before Bitcoin had even broke its 2018 all-time high. It was with you, Josh, that we've been around the players in Dubai, right? Some of the big players, CZ in Dubai right now. The biggest YouTubers in the world are our friends, right? BitBoy and Carl and Chris. And we're all, I think BitBoy's in a lawsuit right now against Celsius, right? So I think there's something up, and there's really something up here.
Yeah, I think so too. And if you want, whenever you're done, let me know. I'll continue with what I was gonna
Go
do
ahead. You can share your screen.
right now. So, because I probably left you guys on the cliffhanger, you're probably like, "What the hell is he talking about? 28,000." So let me just show you where I get blue lines. Okay. And by the way, there's plenty of resistance, I'm sure, before 28,000. Plenty. But we're talking about on the macro view. So if you look right here, these blue horizontal lines, these are the reason all these horizontal lines are here is because that's where the most confluence is for market structure. And so if we zoom in where we're at right now, right? So right now we're at the 20,000 mark, which is iconic because that was the previous all-time high of 2017. So it's like along there is a no-brainer, but I'm not going to be holding on to it forever, okay? Because we could get a retest of this yellow line, which is ironically enough, I believe it's the same or near the same moving average as the 200-week moving average of the Bitcoin versus SPY chart. But essentially, here's the thing, guys. Here's the thing. Anytime I'm between the two lines, unless, as I mentioned earlier, unless I'm having a super tight stop loss or there's some fundamental news or whatever, right? You can kind of rewatch this stream if you want to hear what I said earlier, the times where I do enter a trade between these two lines. But most of the time, I would say, 90, if not 95% of the time, the reason why I do not enter a trade, long or short, when I'm between these two blue lines, anywhere on the chart, is because when you zoom out, you're literally in the middle of no man's land. That's what Naeem and I call it. We call it no man's land. And honestly, when you're in no man's land, you're not trading, you're gambling. And the thing is, guys, trading is not gambling. The reason you never enter a trade unless you are 100% confident in that trade, right? And so the whole thing is we have confluence right here, this blue line at 20,000. But we don't have confluence horizontally all the way up until 28,660. As you can see, look at all these weekly touches. I go by the amount of weekly touches. That's something that Naeem has taught me, is that you want to go whatever, like the more higher the time frame, like a weekly or monthly, and the more touches, the more valid the line becomes. So that's why I told you horizontal lines are the most that I look at and give the most weight. Okay, so I just wanted I probably caught a few of you guys off guard. You're like, what the hell is he talking about? 28,000. Well, it's not about what I'm talking about. It's about what the chart's talking about. And that is simply where we're at. So I'm honestly not going to enter a trade until we hit 20,000. And if you look back, guys, on the last live stream we did, what did I say? I said, look, I'm not going live until 20,000. Now, you have to be disciplined, okay? Let's take a look at the daily here. So we have to be disciplined as traders. You have to be disciplined. And sometimes that means not always being in a trade. I mean, the number one mistake most traders make is that they overtrade. And, it's been said that, if you talk to really rich people that have lost a lot of money, 9 times out of 10, they would have been in a much better position if they would have done absolutely nothing, because the wiggly worm gets the bird. And so you want to trade the best, leave the rest. If you guys are watching this and you guys are full-time traders, these are all things you need to get tattooed on your chest so you don't forget. Because honestly, it's very easy to forget. It's very easy to overtrade. Trust me, I've done it. I fell victim to it. I don't do it anymore. And if that means that, I want to go long, but I don't because I have discipline because we're so close to this 20,000 level, and let's say the shit pumps without me and I lose out on some money, well, guess what, man? I might have missed out on profit, but I didn't lose any money in my actual account. And that's the way you have to be. You have to be okay with not always being in a trade. Like right now, I'm not in a trade right now. I'm not long or short. The reason why is because we are in the middle of no man's land.
And if we move up, Josh and I, we talked about this. We said we've got a long time to go long if we start moving up. If this is the real bottom, if this is the reversal, there's going to be a lot of opportunities to go long. I mean, think of March of 2020. You would have been able to go long at 5,000, 6,000, 7,000, 8,000, 9,000, 10,000, 11,000, 13. You would have been able to go long the whole way up to 69,000, right? So we'll have a lot of time if this is a reversal. When it comes to spot positions, it's a no-brainer to be in right now, but just be prepared for a potential 50% downside, you know?
Absolutely. And as according to these vertical lines, these white vertical lines, you know, that mark the beginning and end of each bull bear cycle, we are due for another one of these white lines. So the moment that we print another one of these white vertical lines, that will mark the start of the next bull run. Now, here's the interesting thing on the monthly. If we look at moon phases on the monthly, what we'll be able to see, actually, you know what? They don't even give us the data. We have to go, I'd have to probably add a custom interval, but weekly, you know, what are the weekly? So we just printed, what is it? A new moon on the weekly. So ultimately things are bullish, but here's the thing. Isn't
guys.
That
tonight? Isn't that tonight though? Don't we have on the daily, go on the daily. Don't we have a new moon tonight? Oh, by the way, if you're planning to enter a trade, do not do it until the new moon. Josh and I learned that lesson last week.
Yeah, I mean, yeah. No, Naeem and I have done, you know, it's like Thomas Edison said, you know, I was bound to succeed because I simply ran out of ways that didn't work. And, you know, Naeem and I have earned our stripes, you know, really, he's been doing this a lot longer than me. So I would take his advice more, but all I'm saying is that, and he's also how I got my start, but all I'm saying, guys, is, we've earned our stripes, and as Naeem says, you know, the cost of intuition, or not intuition, the cost of tuition isn't cheap, you know? And so the reason why we're kind of, you know, putting out this emergency broadcast right now is because we want people to be safe. And I know we're having a retest of the descending triangle, and that's great and all, but right now we're in the middle of no man's land. I'm not taking out a single trade, but I am going to go long at 20,000, and let me show you why. So let's go take a look at daily real quick. And then I've got this little short-term channel right here. But ultimately, the reason why I zoomed out, though, and went to the weekly is I believe, like, because here's the thing. There's the micro of the immediate short-term, like if we're day trading, then there's the macro. And I'm sure we have viewers on both ends. You know, we probably have viewers that are like, you know, they only DCA, spot, and hodl, which, by the way, that hasn't been working out too well for you recently. But it is what it is if you were to start right now doing it, you know. But here's the thing. I believe in the long term, so I want to appeal to both types of viewers. I want to cover the immediate short term, and I want to cover, you know, the macro as well. And so we'll just start with the macro real quick. So as far as the macro, I believe that this yellow line is going to hold. And the reason why I believe that is because, you know, back whenever it was 2017, 20,000, right? We had our bear market, and then right at the very end of the first bear market after hitting 20,000, that's where the yellow line begins. And once again, what makes the line the most valid? It is the amount of weekly touches. This is a line I have not seen anybody else draw on YouTube or anything like that. And it's all used with the knowledge that Naeem has taught me, which is, you know, all the information that he's been giving you guys, which is really great information, really the world's best information, I personally think. Just because I've seen a lot of other people's stuff. But the whole thing is this. I believe this yellow line is going to hold, and I believe if it doesn't hold, it's going to be like the March 2020 situation where, you know, we're down for a little bit. You know, how many weeks was that? Let's just take a look real quick, because I want to appeal to the long term and the short term. So what do we have? 1, 2, 3, 4, 5, 6, 7, you know, maybe 7.5 or so weeks. So, you know, so do I expect that to happen again? Probably not. And it's all about, once again, we reached the yellow line and we immediately turned back around.
Josh, somebody on the chat said, do you think we'll have a black swan event? And there's a couple other comments here, and then we'll answer that one. Triple says they are trying to force American miners to dump Bitcoin during high oil prices. It's working. I'm just going to read comments. If you have anything to say about the comments, you go ahead and chime in, Josh. If you want to remove your RSI from the chart, feel free so I can see your chart better. And I'll pull up my chart in just a second. Corruption, brother. You know how big boys work. Somebody asked the question, any chance we head up to 40,000 area in the short term to medium term? Johnny. Let's see. MDHC says Celsius CEO was caught at the airport trying to flee the country. LOL. It came out 2 hours ago.
No way. I met that guy. So when Naeem and I were both speaking on stage with Steve Wozniak, thanks to Naeem, you know, Alex Michinsky was one of the guys that was there in the audience. And I must have ended up connecting with him or I got his business card. And this is like years ago. and I just never followed up with them. I'm so busy. I've got a stack of business cards next to me, but I always thought it was crazy that that all that's going on. But just what I'll do is I'll turn it back over to you, Naeem. I just wanted to say this one last thing is that we go here to the daily. So we are having a retest off of this descending triangle. I would not personally trade until we get here. And the reason why 20,000 is such a key level, because I can set my stop loss right here at around 19,605 or a little lower. And that risk reward ratio is really huge. And then the last thing I wanted to say, let's go to the 4 hour, is that, yeah, like look at this 4 hour, like look at the candle structure. Like, of course, yes, we're getting a bounce here, but how long is it going to be? I mean, look how bearish this 4 hour is right here. I mean, it looks to me like here's what I think is going to happen. And once again, I could be wrong. It could hit very close to it and then pump. This is what I believe is going to happen. And I think this is very valuable for our viewers to see. So I'm going to just draw it out on my chart. I think this is the best way to do it. So I think, and by the way, we have a lot of other big YouTubers that were saying inverse head and shoulders. Well, that didn't play out too well, did it? Right? So that's why you always got to remember, like whatever you think is usually going to happen, it does the complete opposite. So here's what I think is going to happen. And we'll kind of see, but this is kind of what I see happening. So we came up here, okay? We came up here. In fact, let me, actually, no, it'll still work. So I think we're going to come back. We're going to retest at 20,000. And the reason why
we'll enter a long position there, Josh, as we've
been because here's the thing:
tight stop loss. I'll send it out on Discord. I think that's.
And I didn't even realize this until Yeah. So basically, what I'm saying is there's a double top here, and Naeem and I have called this double top before this double top even happened. We were telling everybody, be careful. There's a double top. And then obviously, if you remember our last live stream, we wanted to go long here at 20,000. But here's the thing. It's going to be a double bottom. So that's going to be another reason why I'm going to be going long, because we have a double top, which is bearish. And then the only realistic target, guys, is 20,000. I mean, look how close we are to 20,000 compared to the next line of confluence all the way up here at 28,000. We don't have to be a rocket scientist to figure out, hey, we might actually come and hit this level before we hit this level. And the reason why is because the price is always magnetized to these blue lines, It's always magnetized to these blue lines. It will always hit. I'm what you call a blue line trader. I only trade the blue lines, and it will always hit the blue lines. It's never going to stay stuck in between the blue lines. It might take some time and it might go sideways for a while, but it will always come back to these blue lines. Okay. And so what I'm saying is, I believe this is gearing up to, and I am personally going to put my own money where my mouth is. I'm going to go long here. Now, could we keep, busting through this support right here at 20,000? Yes, that is a possibility. It's very possible that we retest this yellow line down here, because that's the line that has the most confluence on the entire chart. So I believe that could happen. But here's what I truly, honestly believe is very likely. Let me just delete that one. Okay, so here's what I believe is most likely. I believe we're going to hit 20,000, and even if we do smash past 20,000, I believe it'll be a quick. It's going to basically be a quick wick, and this is where my stop loss is going to be. It's going to be roughly right around like right here. Okay, so we'll make this red just so you guys can kind of see this red dashed line. Okay, this is just an alert, this green line, to alert me once it hits the blue line. Okay, so that's my stop loss. My entry is here. Even if it comes down and hits my stop loss, that's fine. It's okay, guys. Like, the one biggest mistake a lot of traders make is they let their trade go too far in the red. Do not let your trade go too far in the red. I've experimented with all different types of trading, all different types of strategies. It's always better to lose a little bit than it is to lose a lot. And honestly, if we go too much past 20,000, then that could indicate, unfortunately, a trend reversal. And the last thing you want to do is be in a long during a trend reversal. Trust me on that. And so I'd rather lose a little bit than lose a lot. And you have to realize, guys, when you're trading, you're gonna you're gonna lose eventually. And the thing is, like, who cares if you get stopped out, 3 or 4 times? As long as you hit it on the 5th time, then you're good. And so So here's the thing. That's my mentality. That is honest to God, my mentality. And that's what I'm doing. And then here's the thing. So Naeem made a valid point. You know, he said, Josh, what if there's a dead cat bounce at 20,000 and you went long? Well, that's why my strategy, I'm a scalper. I'm a day trader scalper is what I am, you know? And so even if we come down here to 20,000, even if we do get a dead cat bounce, which by the way, you know, I think we're experiencing one right now. I mean, look how bearish this 4 hourly is. And we just had a rejection from the daily weekly open. But here's the point I'm trying to make, guys. This is the last thing I'm going to say, and then I'll hand it over to you, Naeem, is that even if I'm almost guaranteed, I don't want to say this because nothing's guaranteed. For all I know, you know, Satoshi could wake up tomorrow and find the the private key to his wallet, and you know, and then there goes Bitcoin, right? So I hope he doesn't wake up and find what his private key was. So obviously there's no guarantees, guys, and this is not financial advice. We are not financial advisors. We're just letting you know what we're doing with our own money. But I personally, okay, now don't make trading decisions based off of me or anything like that. But all I'm saying is I personally am going long at 20,000. And even if it is a dead cat bounce, I'm already going to be out of the trade before we see too much of a correction. You know, so you might be asking.
What's your take profit? That's what Japlet just asked.
So we might, because I was just about to get there. You might be asking, what is my take profit? Honestly, we come down to 20,000. It's probably going to be this weekly open. You know, is what profit. But I'm going to take profit in 3 or 4s. Meaning I might take profit, you know, a little bit here, one here, and then my last take profit would be at you know, this level right here at the weekly open, 21,000. And the thing is, if you're leverage trading, you know, these small percent moves add up. I mean, like literally you go up 1% on 10x, you know, that's 10%. So, I mean, you don't need, and 10x is still a lot of leverage, guys. You guys don't need to be using that much leverage, seriously. Like you're going to be, these opportunities are always going to be here. And, you know, it's a good way to get wrecked. What was it? Warren Buffett, or I think it was Charlie Munger, said that, you know, there's that whole 3 L's that make you lose in life, right? They say ladies, liquor, and leverage. That's what Charlie Munger said. But he also said that, you know, leverage does not make a bad trade good, but leverage can make a good trade bad. So that's something to understand too. But here's the thing, what I'm trying to tell you guys is I'm going to take profit around this area, this zone right here. I'm going to go long at 20,000. If I get stopped out, I don't care, because that at least I'm not going to be caught, you know, metaphorically with my pants down in the middle of a trend reversal, which is something BitBoy always says. He's like, man, every time there seems to be a trend reversal, I always catch myself right in the middle of that. Do not let that happen to you guys. So that's what I'm personally doing. Even if it is a dead, I'm very confident we're going to get a bounce at 20,000. I'm very confident of that. The chart shows that and tells that. All you have to do is look at all these 4 hourly touches that we've touched it. So I'm very confident we're going to get a bounce at 20,000. And even if it's a dead cat bounce, I'm already going to be out of the trade. I'm already going to be in profit. And that's kind of the way I'm handling it. So that's all I wanted to cover, and that's all I wanted to say. And then I'll turn it back over to you, Naeem. And I can always go over some stuff here in a little bit or take some questions, but I want to...
Yeah, let's take some questions. We do have a lot. Crypto Chavez says, Snipers Tube OG here. Thank you for being with us for the last 5 years. We haven't heard the name Snipers Tube in 5 years. That was the start of the channel, actually. That was the initial name of it. Let's see here. So that was your take profit. Thank you so much, Josh. You're adding so much value. Remember, guys, we want to get him to 1,000 subscribers. We already hit over 100 from just one live stream. Let's get him to 1,000. He'll start doing his own live streams. He's my best friend. We were roommates for 4 years at a penthouse in Hollywood, Josh and I. As a matter of fact, it was insane that 4-year time frame. We started several companies together, and we advised many celebrities and billionaires in Hollywood together. And you're still there in Hollywood, so I'm sure you're enjoying that. You were with Mike Tyson last weekend.
I'm not going to say who I was with yesterday. We're not.
Oh, don't mention that, man. I won't mention that. You were at the second largest house in Los Angeles.
Families, you know, that we're working with and we're involved with. But honestly, guys, it's not about us. It's about you. And we want to give you guys our market insights. You know,
oh my God. All right. So this person just keeps saying the same thing in the chat. Zine is like, is Ethereum going to hit 900? Here's the thing with Ethereum. All right. It's very clear what's going to happen to Ethereum. There's a range that we're playing in, and charts are black and white. The range that we're in right now has a support. And if you guys want more altcoins for us to look at, put it in the chat. We'll do it before we wrap this up. But I'm going to take your request, Zine. You keep mentioning Ethereum at 900. 1165 is the major support, and 1277 is the major resistance. These red lines are not lines that I've just randomly thrown up on this chart. Matter of fact, these red lines have been on the chart even before Ethereum crossed below 3,000 US dollars. I mean, these are major snipers support and resistance levels. And so we've already known this is an extremely important range. If we break below 1165, then yes, 900 does come on the table. 909 US dollars would be the next support. Just remember this, Josh and I have been in this market for quite some time. I still remember 2018, Ethereum went to 1,400 US dollars. And during the bear market, it came all the way down from 1,400 US dollars to 82 bucks. And so I'm not saying Ethereum is going to go to 82 bucks. But what I am saying is not only is 909 on the table, but if Bitcoin cannot hold the recent low, 780 is on the table. And if that breaks, we already know what could come on the table after that. I mean, we're talking levels sub 700. And so for Ethereum, if we break below 1165, $900 does come on the table. So what were you saying, Josh? You were just saying something so important, or we were looking at comments. So Rick Chav Sanchez says, what exchange do you use to minimize transaction fees and slippage? All right, so here's the thing with exchanges. It's pretty simple. If you're in the U.S., you want to use a U.S. regulated exchange. Kraken's the best one. It has the most options with altcoins and actually gives you a little bit of leverage, right? 3 to 5x, whatever it might be. And then if you want to just use Coinbase for spot exchange and Gemini, those are great for spot purchases. If you're willing to use a VPN, you can't use Binance anymore. So you want to use KuCoin, right? Because KuCoin will let you leverage as much as you want at that point. But just keep in mind you're off U.S. regulated territory, and we all know what happens when that's the case. And so it's a gray area, but
even within the U.S., right? Look at Celsius, right? So,
dude, that's what I'm telling you. Something is up right now with Bitcoin.
So
Something
that's
is up.
why you never want to put more on an exchange than you're willing to lose.
Because if Bitcoin does move back above 25,000, there is a possibility Celsius does not go bankrupt and that they could potentially get out of this. But it almost seems as if there is a bad actor that's saying, no, 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 we're going to get you. And if that's the case, I mean, we're in for a wild ride. Just realize that would certainly be the bottom. And if it is, we'll call it the Celsius bottom, because we'll look back years from now and say, God dang, remember that Celsius bottom? I mean, who knows what's going to happen with that, but something is up.
Yeah.
MDHC says, as Kyiv is being bombed again, uncertainty with Celsius network and all other macroeconomic factors that are currently taking place, don't you think the odds are greater towards the downside for BTC? Here's the thing. You would be foolish to be a bear right now on Bitcoin in the long term with where price is currently at. I mean, just look at the monthly chart. We've pretty much seen the same amount of downside that we saw from the last two major downside cycles, but this recent cycle is just as large, but starting from where people thought the bottom was. And so it's like, talk about an over-exaggerated move. Like,
that's crazy.
People thought this was it, and then we got this. People thought this was it, and we now have this, which is the same size of what we saw here, but starting from here. And so, to be a bear here, macro is foolish. You're going to be proven wrong at some point or another. It's going to bounce, right? Whether it bounces here, whether it bounces, the scary part, I would say, is that it could potentially still see from current price action, maybe 50% downside, right? So that's why we want to be prepared for that when it comes to spot. When it comes to day trading, have fun with short positions until we get a confirmation of a reversal. That's all I'm going to say. And I'll also add to this, you're going to be very glad that you've entertained long positions as well if we truly do see a reversal. But right now, things aren't getting better, and therefore, we could still take short positions, right? We were shorting altcoins all day in the Discord today. It's not a bad idea to make some money based on the trend, right? That's one of the rules. You follow the trend, the major trend. And so I think that answers that question. And let's see here. Somebody says, Bitcoin is back to the same price it was 4.5 years ago. Way oversold. Think about that, guys. And then somebody else says, let's see. Seriously, I'm tired of seeing Naeem's flabby body every time I go to watch his video. What's funny? I actually wasn't planning to change my profile picture to that, but I ended up changing my Instagram profile picture to that. And then Dan Fleischman, one of the masters of social media, I saw a post where he said all of your social media has to have the same profile picture or else you're not congruent with your brand. So I just tested the profile picture on the YouTube channel, and literally within 3 days, one of our YouTube shorts hit 5 million views. It just blew up after I changed the profile picture. And when that happened, I was like, whoa, I'm just going to leave the profile picture the way it is. And then we had, I think now over a dozen shorts that we posted get over 1 million views. And that was the reason I kept the profile picture, because I guess, I mean, it's better than a cartoon face of me, right? So that's the reason for the profile picture. And since then, I mean, it was really because of what the algorithm did after changing the profile picture that I just decided to leave it like that. Not that I want it like that, because, I mean, you know, I have a standard to stay up to, or else it's going to be whatever. Davey says, so if we get that bounce up from 20,000 to weekly open and roll over, that would create a nice head and shoulders to short. You know, if you want the good short position, Josh and I, this is what we're talking about. For the first test of 24,000, we're probably going to take a short, depending on how it comes, right? It's very dynamic when you're trading. If we see a massive pump, you know, let's say Bitcoin's up 15% that day and we enter this little pocket, I'm going to take a short position. If we stair step our way up to this position, I might be a little bit more cautious and wait for some confirmations. Always wait for confirmations on the smaller time frames. But if we're going to short, I'm looking at this pocket here. But, you know, it's not that you want to ever short Bitcoin. It's the fact that when Bitcoin does reach these levels, you go and you short Ethereum, or you short Cardano, or you short any altcoin that you choose, because the altcoins will see more volatility. I never short Bitcoin. I love shorting altcoins when Bitcoin looks like a good time to short, right? It's just a rule.
Well, that makes sense. Yeah, and like the one thing I want to point out too is if you guys are going to short, like every time I do a short, even if it's a clear, obvious opportunity, you want to use lower leverage and you want to use a less of a percentage on your account, you know, because shorting can be very risky, especially without a known resistance level, you know.
Inherently more risky because there's unlimited downside versus long, which is only 100% downside. So you're right, Josh. It's inherently more risky. Somebody said, why did Cardano bottom on May 11th, right? I see the bottom. And Solana June 13th before the crash. Well, Solana had a big issue with Solend, but this is what's interesting about this question. Not only did Cardano bottom out on May 12th, but the one equity in the stock market that holds the most Bitcoin, called MicroStrategy, owned by CEO Michael Saylor, also bottomed out on May 11th and has yet to breach those lows, despite Bitcoin seeing further lows. And this is an institutional instrument that some players can only enter Bitcoin through, especially institutions that have no access to Bitcoin spot. And so I think it's very interesting why not only MicroStrategy, but even Grayscale Bitcoin Trust, if we were to look at the second largest holder of, actually they don't hold Bitcoin, right? Because it's not a spot ETF. But if we look at GBTC, right, it's another instrument that institutions likes to get exposure with. That I believe also, no, it didn't. MicroStrategy did, GBTC didn't. I heard that the Grayscale Ethereum Trust is trading at a 50% discount right now. Isn't that crazy? So if you buy the Grayscale Ethereum Trust, you're getting a 50% discount. Why is this the case? I mean, God, look at this. What are they expecting here? I mean, it's just something that you have to ask yourself, right? What are they expecting here? We're back to the same prices, what, 7.09. We're talking September, October of 2020. I mean, where was Ethereum back in July of 2019? Let's go look at that. July of 2019. Where was Ethereum? What are these guys expecting is my question, right? July of 2019, Ethereum was at $150. So Grayscale is trading Ethereum at $150. I mean, not exactly, but I mean, it's just kind of interesting to see some of these things. I'm not saying that that's going to happen. What I am saying, though, is when we're in a bear market, these instruments tend to have discounts. We're in a bull market, they tend to have premiums, right? And so it's just interesting to see that. Hannah King, welcome to the stream, says, just join. What do you guys think of Bitcoin? Delshon says, El Naim, you wild for even explaining that to the hater. LOL. Japlet says, at 20,000, would you be longing just Bitcoin and other alts too? At 20,000, would you be longing just Bitcoin or other alts too? No, I would be very careful with alts because, as I showed you already, Compound, just from the recent lows, is already up, let's see, 113%. So I think you want to be a little bit careful when it comes to altcoins. I think there are certain altcoins, it's all based on volume, and you have to have, I have a whole watch list for altcoins because we're trading them almost on a daily basis. And so, altcoins are a whole different topic. I don't want to get into it in a bear market right now because, as Josh said on our last live stream, they're pretty much going to follow Bitcoin. And so it's good to just follow Bitcoin for now. We'll talk about altcoins soon, maybe.
There's low. The thing is, like, the reason why Naeem and I only trade Bitcoin, maybe Ethereum, is because of the, number one, the market cap, and number two is the liquidity. So it's just, it's one of those things where it's just, I only trade Bitcoin myself personally. It's just something about Bitcoin. I've just always been good about Bitcoin. I've always been able to, predict Bitcoin. So it's like, I just kind of stick with that. Another good friend of Naeem and I's, Rick.
I do trade altcoins, Josh. I trade, and you know me, I trade altcoins every single day, but I trade them with extremely high leverage, like 20x, 25x. And sometimes I'm in the positions for less than a minute, sometimes a couple of minutes. I like to trade altcoins to make another dollar, to buy some dinner, to buy some lunch. It's a good way to practice trading. It's a great way to make money on a daily basis because there's opportunities every single day when it comes to altcoins. It's just so volatile. It's the same way that if you're tracking the NASDAQ, right? If I were an equity market trader, I would be covering the NASDAQ on a daily basis, but I'd be trading TQQQ because it's leveraged times 3. NASDAQ ain't going to move enough for me to make enough to get my Chipotle bowl tonight, right? So it's just that mindset. There's different types of trades. There's different types of ways that you can trade. And, when it comes to large positions, right, massive amounts of capital, I'm trading Bitcoin because that's what I trust with the massive amount of capital. And it's not going to move to a point where I'm going to get liquidated, within a second, right? It's meant for a trader. It's a swing trading asset, in my opinion. More than anything, it's a swing trading asset. Matter of fact, TQQQ is more volatile than Bitcoin. Interesting. Like Bitcoin's down 0.66% right now. And you go to TQQQ, which is what all equity market traders trade, it's down 2.36%. So TQQQ in some ways, what's funny? They actually made an ARK ETF that's leveraged, which is really funny because the same people that made TARK, which is a triple leveraged version of ARK, which is already a very leveraged version of the NASDAQ, right? I mean, ARK, if the NASDAQ is up 2%, is going to be up 10%. And so it's funny because the same people that made SARK, which is the short of the ARK Invest, which it's funny because as soon as they created this ETF to short ARK, which was the innovation, Cathie Wood's ETF, it skyrocketed. It did really well, the short. Shorting ARK was a great idea when they launched the short ETF of ARK. And it's funny because now they just decided to launch the long version of the ETF leverage. So now we've got TARK. Obviously not performing as well from the start, but who knows? Maybe it was a sign that they believe a reversal's coming soon. I don't know. We'll see. Or 2x leverage. Sorry, Rick. Thank you. Somebody has a question for you, Josh. Have you heard of the Bitcoin capitulation miner dump? Feels like it's tied to high oil prices.
Yeah, of course. And you can actually look in the weekly RSI and compare it to the last miner capitulation dump. And you can see that we're literally at those same levels on the weekly RSI than we were, previously.
Do you want to show it on your screen? I can have you.
Yeah. Let me go ahead and do that.
We're going to wrap up this live stream, but if you guys have any more questions, we'll respond to them. Yaya says, I've been watching your channel for over 2 years. You always have the best technical analysis on YouTube. I try my best. Every single day, I try my best. That's what I tell Josh. I'm always trying my best. He's like, how do you make these videos every single day? I'm like, I'm just trying my best, man. And by the way, I looked at weekly on-chain exchange flow before we started this video. I was going to do an iPhone video, but we really wanted to do a live stream today. We had over $4.3 billion worth of USDT inter-exchanges this last week. That's a lot of USDT entering exchanges, and we have a new moon tomorrow. So I just want to throw that out there for some of you.
Wow. And then plus, if you want to mention that CPI inflation report.
That's on what, Thursday morning? I think that's Thursday morning. Yeah. So some people are thinking we're not going to move until CPI numbers come out Thursday morning. So we'll see.
Yeah. So basically, I don't have it pinpointed. It's on a different chart. It would take me a while to pull it up. But essentially looking at it is every time that we had a minor capitulation, we've always tested historic levels on the weekly RSI. So I'll have to pull up my other chart to show you exactly what those levels are. But one thing while I'm here that I do want to point out is that relative strength index, it ain't no joke. It really ain't no joke. We've never been this low on the weekly RSI in the history of the asset. I mean, if you look at the oscillator band, because all an RSI is, it's just an oscillator band, right? And so when you look at the top of the oscillator band, there's been plenty of times we've broken above it, right? Gotten as high as, 90 up here, right? But we've never in the history of Bitcoin ever dropped below 29 until recently. So it's like, not only did we have the minor capitulation dump, but we also have all these other crazy black swan events like Celsius, Three Arrows Capital. We have all the money printing from the United States government. We have all the, political uncertainty, all the economic uncertainty, all the war uncertainty, et cetera, et cetera. Like, we're going to be looking back, just like Naeem says, deja vu. It's like, we're going to be looking back and we're going to be wishing that we bought a lot more Bitcoin on spot. And here's the other thing too, is that, there's another quote I read that goes like this: when the time comes to buy, you will no longer want to. And I just want to say that one more time. It's like, because it's so important. When the time comes to buy, you will no longer want to. And what that means is there's going to be so much blood in the streets. There's going to be so much. I mean, we could even come down and test this. I think it's highly unlikely, but we could test this yellow line as resistance. And if that happens, you're going to see things get bearish very, very quickly. I mean, it's like very, very quickly. And so the thing is, I wanted to point out here, I originally wanted to show the minor capitulation dump in the past, but I'll pull that up another time. But the whole thing, though, is just pointing out on this weekly RSI. I mean, we are below the oscillator band for the first time in history, in this asset's history. So if now isn't a good time to be long, not only do I not know what is, but at the same time, we're going to have, a lot bigger problems. If Bitcoin continues to dip down below this point, and specifically below this yellow line here, which would be somewhere around, the 16,000 mark or so, 17,000, we're going to have a lot bigger problems than just the price of Bitcoin going down, because that means we would literally be pretty much on the edge of a societal, economic collapse. And in that case, you better have a lot of gold. But and not only gold, you better have, there was something Naeem posted on his Instagram story one time I thought was so funny. He said the S&P 500, which by the way is a correlated asset to Bitcoin, said the S&P cannot go to zero, because even if it did go to zero, you would have much bigger problems to worry about than the price of the stock market, because at that point, you better wish that you had invested in beans and bullets. Those were the two things. It was some meme that you posted a while back. And I remember seeing that. I was just like, holy cow, man, this is absolutely the truth. So it's one of those things, guys, you have to get your macro portfolio in order, with not just digital assets and physical assets, but also, survival food. There's food that comes, in these sealed buckets that last 30 years. There's survival water that comes in these cans that are hermetically sealed that last 30 years, things like that. I'm not saying go crazy and go all out and, live in fear or anything like that. But all I'm saying is don't be scared, get prepared. That's all I have to say. Because then whenever you look at these digital assets and and you're looking at these crazy things that Bitcoin's never done, like go past its previous all-time high and retest it below it. And the fact we're looking at this RSI, it's kind of like what Naeem said. I mean, it's like, if now is not the time to go long in the grand scheme of things, then I don't know what is. But basically, just what I'm talking about here is, especially in the immediate short term, is I'm personally waiting until, once again, I'm a blue line trader. And Naeem's chart, he uses red lines. So in that case, I'd be, a red line trader. But the fact that we just keep getting rejected right now off the daily and weekly open, which is ironically enough, also where the, let me move this RSI down. But also, ironically enough, it's exactly where the volume weighted average price is.
Oh, so yes, I saw that on somebody's chart on the Discord. It's the VWAP.
So confluence right here. We have the daily and weekly open, and combined with one of the most arguably important day trading, not just indicators, but moving average, which is a type of indicator, and it's the volume weighted average price. And so if we test the volume weighted average price as resistance, that is very bearish, for the immediate short term. And this candle structure right here on the 4 hour, it's weak, it's showing weakness. And honestly, until we come down and, because we talked about the long term, I want to talk just about the immediate short term. I mean, literally this right here that we're looking at, just in the immediate short term, if we can't come and break above this specific line right here, this red descending line diagonally, then we are bearish, And so, I mean, I don't mean we're bearish. I'm just saying like it's a bearish.
We're in a bear market, man. We're definitely bearish, but
at
any point,
because I'm a bull long term, and I don't want this stuff to go down as much as you guys don't want it to go down. But the thing is, though, is
bear markets, bear fruit.
Yeah, bear markets, bear fruit. So I'm waiting till 20,000. I believe it's going to happen. And if not, and we break above this double top and we get a 1 hourly candle close above this double top, then maybe I'll think about going long and set my stop loss. Because you have to think between support and resistance, this red line and this blue line, this white dotted line, it's kind of like the zero line, right? It's the halfway mark. And so look at this, starts dumping right whenever I say that.
Somebody just said this, Josh. Rick Sanchez says, those who worry when the time comes, they don't have to worry.
Well, it is what it is. Whatever works for you, man. But all I'm saying is this, is that if we cross above this zero line, the halfway mark, and we get an hourly candle confirmation close, and it's not a fake out, I may consider going long, but honestly, most likely I'm probably going to be a disciplined trader. But if I did go long here, I would set my stop loss somewhere right below this halfway point. And that's kind of how I would handle that. But right now I'm waiting on 20,000. And, there might have been some people that thought I was crazy, on our last live stream. They said, oh my God, he's waiting until 20,000 to go long. Can he see? Obviously we're in this uptrend.
No, you were the one telling me to short. You were like, I'm going to short this. This is not going to break.
What did I do though? It's a double top.
It was a great short too. Yeah.
And I'm honestly not even short right now, but I am going to be going long at 20,000, and I'm not going to be holding it till the cows come home. I'm going to be out of the position so that even if it is a dead cat bounce, you have to take what the market gives you. You can't be greedy. And even if it's a dead cat bounce, I'm still going to make money, because guess what? A dead cat bounce is still a bounce. I'm going to be in and out like a cold shower,
Like Wim Hof.
So that's where, Wim Hof method. Like, it's so funny because we said, so by the way, Naeem knows Wim Hof. Naeem is, he's an advisor to billionaires, celebrities, like literally icons. I mean, like this guy is like, he's the reason why I was speaking on stage with Steve Wozniak, if that tells you anything at all. So Naeem is just a very humble soul, but he's really big time, when it comes to all that stuff. But it was so funny because he went to go hang out with Wim Hof, the Iceman and breathing and all that. And we made a funny joke about Ethereum because Ethereum fluctuates so much. We always say it has a lot of room to breathe. And it was so funny because one time Naeem and I we were just chilling and we were talking about that. And we're like, man, Ethereum's got a lot of room to breathe. And you're like, absolutely, man. Just like the Wim Hof method, which I thought was so funny because the Wim Hof method is a very forceful inhalation, exhalation, like you're hyperventilating a little bit. And I just thought it was so funny, And so that's really why I'm also trading Bitcoin when I trade, because it's just more stable and I can kind of just, predict more about what it's going to do. So that's all I wanted to cover from that side of things. But I just wanted to share that and let you know that until we break this red line right here in the immediate short term, and even if these are candle wicks, so sometimes I like to go based off the candle bodies. Sometimes you can just cut or leave a little meat on the bone. But yeah, so, this is what I'm looking at right here. Until we break out of this line, which ironically, I think it's going to come down and hit 20,000, man. And then it's going to bounce. It's going to, it's going to pass this line. So that's what I'm looking at. And, if you would have, taken my advice, you would have been in a good position, because we tried to warn you guys not to go long here. And now, it's playing out. So that's what it's all about. Let me go ahead and transfer back over to you.
Thank you so much, Josh. Guys, we're trying to help Josh hit 1,000 subscribers. He's my best friend, but more importantly, one of the best analysts that I personally know. A student of mine over the last 4 years, and he's never been on social media, and now he finally started a YouTube channel. So let's get him to 1,000 subscribers, and then maybe he'll be motivated enough to do his own live streams eventually and become a crypto YouTuber, right? Enter the space. I'm going to wrap up this stream in just a second. Thank you so much, Bernadette, for your kind words. I've been watching Naeem since you first started your channel. At that time, you would shave your head or dye your hair. I've been here a long time. Keep doing what you do. I don't know if I'll ever do that unless we hit 100,000 subscribers. Not unless, but when we hit 100,000 subscribers, because this is the #1 cryptocurrency technical analysis on the internet. I've watched every single YouTuber. We bring it to you guys with the best content, the most immediate content, and more importantly, the most brevity. And that's what I'm proud of. It's the brevity that I strive to put forth through every single video, because brevity is very important. Josh, you're the one that told me this a long time ago. You were like, always speak with brevity. What is the definition of brevity to you, Josh?
Yeah, just keeping everything brief and, not saying more than necessary. It's one of the 48 laws of power by Robert Greene. Always say less than necessary. And then there's another very, very successful Chinese guy I know that owns the rights to like Marvel and a bunch of other, crazy cool stuff. Very big guy here in Beverly Hills. And he always says, every time you open your mouth, your price goes down, and too much circulation makes the price go down, and familiarity breeds content. And so, you just got to keep all that stuff in mind. And the more brief you are, the more people are going to retain as well.
So I want to mention something very interesting before we wrap up this video, and I'm looking at Bitcoin against the money supply right now, which is an interesting chart because we tested the 2018 previous all-time high, and we actually got a major bounce on this chart. It doesn't look that big, but we did actually bounce up 16% from the actual high, but just the bounce itself was over 27%. And now we came down and we tested the high that was formed in June of 2019, right? So we had this initial high, we had this June high, and right now against the money supply, it's almost as if Bitcoin is back at, let's say, 13,000 US dollars. And that's a target that you'll hear a lot of people talk about right now, 13,000, 9,000. I think that the equivalent of the bears that were calling for $1,000 back in 2018 are the same type of bears that are calling for, let's say, 5,000 right now. I don't think that's even possible. But I think that any of these areas could be where the bottom comes. I think a lot of people are in agreement with that, or we could have already have bottomed. It's just very interesting to see some of these other charts, the Bitcoin against money supply chart and so forth. Sebastian says, doing keto? No, I am not doing keto. I eat a lot of carbs, and I'm actually trying to gain weight right now, so I'm not trying to cut carbs. I like carbs. They make you happy. They make you feel satiated. Some people are like, Naeem, go start a fitness channel. I'm like, I might have to do that. Jaffa says, thank you so much, guys. Well, Josh knew me when I was a freaking pig. I was like 220 pounds. I was huge, man. I've been fat my whole life.
Crazy? When you started losing a bunch of that weight, I would still see you eat a lot of food, and I'm like, where is all this food going, man? This guy just still loses weight, and doesn't even, Like, I wish I could eat like that and lose weight, you know?
Dude, I eat a lot of food, man.
Metabolism going, and maybe that's why you can burn it off so much.
No, it was a lot of exercise. Let's just say that, man.
Well, exercise is a form of exorcism, right? As we always say.
Exactly.
So you're
Japlet
sweating.
says, thank you so much, guys. Timothy says, I still remember Naeem drank that seven or I know what he's talking about. I used to have a drink every single time I was on. All right. So with that, I think we're good, snipers. Josh and I are gonna be here. Remember to subscribe to his channel, if you've yet to do so. And Josh, thank you so much for coming on with us again. We've definitely got to do this more often. We might come on to a live stream on your channel tonight. Who knows? Let's see. If something happens, we'll go on your channel and go live. So that will incentivize people to subscribe to his channel. Let's get him to 1,000 subscribers. We might even do another collaboration on our channel tomorrow. Who knows? This seems like something that's very good. People enjoy it. It seems like, I think. You guys enjoy it? Let's hear it in the comments. If we can hit 100 likes, we've got over 100 viewers right now, then we know you guys are enjoying this content. But we know you guys are based on the comments from the previous one. So other than that, do you have any final words, Josh? I mean, maybe let's talk about, like, what are 3 things that we could give people advice on during a bear market before we wrap this up? Like, just to make people have a better perspective of the phase that we're in, macroeconomically, geopolitically, things of that nature.
That's it. I mean, here's the thing, guys. I got to be real with you, and some of you may not like me because of it, but I got to keep it real. Even Brock Pierce came out with a press release not too incredibly long ago that says, be careful about going all in, because he's old enough to experience and remember the .com boom and bust. And it's like, the success, I just want to say one thing, the success of Bitcoin or cryptocurrency is not guaranteed. The same way that the success of America is not guaranteed. We've only been around for 200 something years. So it's like, it's not a lot of time. I mean, Bitcoin's been around 13 years, so that's why it kind of acts like a 13-year-old, sometimes, right? It's up and down mood swings, right? but here's the thing, guys, like as much as we want to go all in, you got to always have a plan B, guys. You always got to have a plan B. It's okay to put a lot in, right? At the right time, perhaps, but like, you gotta understand, man, that you just got to be careful, right? And Brock was warning people, about going all in and things like that, because it's one of those things, like, even though we all feel really good about it, the success is not guaranteed. And then I did have one quick magic trick I wanted to show too, at the very end. So I don't know if you want me to do it now and then you say some closing words, or if you want to wait till the end. It's up to you.
No, run with it, man. I've talked a lot on this channel.
So even though trading is done the right way is nothing like gambling at all, and I'm not a gambling man. I build businesses and have a marketing company and things like that. But what's interesting is I do have a deck of cards because I've always been a magician, right? And as you can see, all the cards are different, of course, obviously. But what I want you guys to do is look at a card in the deck, not this card, not the Queen of Clubs, but just see if you can just peek inside and just see one card in the deck. Not this one, but just, like I said, peek inside and see one card. It doesn't matter which one, just visualize it, but don't say it out loud, okay? Now, this is not the card that you guys are thinking about, but with success, anything we hold in our mind, we can hold in our hand. But watch what happens whenever we start to really think about the vibration of the thought. Watch. See how it changes. Now, what's interesting about that is, this is most likely the card you guys are thinking of, but the cool thing about it is that this card is blue and all the rest are red. So I knew ahead of time we were going to think of this card. So that's all I wanted to show. So leave us a comment down below if you guys enjoyed that. And always remember, you never want to gamble, right? Because it's very hard to do. Especially when you eat a whole bunch of cards. But it's all good. It's all about technical analysis, never about game.
Snipers,